Good morning and welcome to the market forecast. Today is Tuesday, June the 22nd. I'm John Hoagland. Thanks for trusting me with your time. I don't know if you noticed, but yesterday was the first day of summer and the longest period of daylight of the year. The sun was up when I got up and up when I went to bed last night. It was a long day, and it is always exciting to see. Oh, goodness. Everybody here today, and I've been struggling with the charts. Had them solid. Now they're gone again, but that's all right. We'll get through this. As always, happy summer, and we're always looking for accurate context, good risk management, and good patience in our trading. Is this morning economic numbers kind of thin, of course. 9 o'clock this morning, we do have existing home sales. 1 o'clock, Fed Chair Powell is due to speak at the Joint Economic Committee. It's going to be a prepared statement, but this is going to also include a question and answer session. So if there's any headline news, I would look for it there. He's going to be talking mostly about inflation, of course, and his expectations that it is going to be transitory. However, at the last FOMC meeting, 13 of 18 FOMC officials favored a rate hike in 2023 versus 2024. That's up from only 7 that thought that in the March FOMC meeting. So little hints of increases of rates sooner than we perhaps thought. U.S. stock indices really kind of ready to open steady ahead of Powell's testimony. Crude prices kind of ratcheted higher overnight, still struggling with that weekly kickoff high. I think, some expectations of a less Iranian oil hitting the markets after the election of a new president in Iran. The president in Iran I don't know how much power he really has. Everything seems to have to go through the Ayatollah. So we have to wait and see on that as well. As always, make sure you like, share, comment, question, feedback, and heckling are always welcome here. And make sure you subscribe to our YouTube channel. Checking the VIX, the dollar index, and the 10-year yield just a couple of minutes ago. VIX is up a little bit, or down a little bit, I should say, of course, with equities kind of starting the day even. At 1751, down 2% from the close from yesterday. Dollar index still holding above 92 at 92.11, and the 10-year yield back above 1.5%. Always like to say good morning to everybody. Theo, first in the room, you win the prize this morning. Brian, good to see you. Tone, Nico, Jorge, Caesar, Zorain, good to see you. Taurus Trader, is always good to see you. Ryan, the chef, Mr. Magallanes in the room. Jay Gilmo, Jason, good to see you. Buenos Tuesday, of course. Jim Wolf, good morning. Past step 2, waiting unfunded credentials. Looking forward to the next adventure. Congratulations, Jim. Always happy to hear about successes, and that's what we are here for, is for your success. Greg, traders, may your day be filled with good risk management. Absolutely. Vince, good morning. You're already working on good risk management, Mr. Capria. Vici, good morning. Jason, Colin, JD, good to see you. Vici, congrats, Jim, of course. Greg, everybody congratulating Jim. Excellent. Good morning, everyone. Murph, good morning. Hope you all have an amazing trading day and otherwise. Tim G, Deanna Floyd, Andres, Brian Silcott, bring back Lacey. All right, we can do that. Ednelson, Brian Lacey is top stepper, is good luck charm. Hey, Lace, come here. Where are you? Oh, you're right here. Come here. They want to say hi. Come on. Come on. Oh, there's Lacey. Hi, Lacey. Hi, Lacey. Oh, all right. Here's your good luck charm. I'm getting licked by it. All right. It's enough. All right. Good morning, James. Jerry is awake. I'm awake too, I hope, as always. Uh, well done, Jim. Of course, Rob. Trader Candela, good morning from Colombia. Welcome from Colombia, Dr. VJ KM. Uh, if you're new to the market forecast, welcome. Glad to have you here. As always, we're looking for opportunities to find some good context and see what things are going on here early in the session. And we are going to get the charts up here very shortly. Here, let me work the magic here. They were really giving me a problem earlier, and I thought I had it fixed, but we're going to see if this is going to fly for us. Wow, Venezuela. Wow, we got a lot of folks here today. KM, hi Lacey. Yep, what a good girl. Yeah, she's my office buddy these days. All right, so I got the charts up. Let's get things set, and we will get through all of this. And on to the daily in crude oil. All right, crude oil. It's obviously been moving from lower left to top right for some time. Let's make this a little bit larger so we can all see where we're at. Excuse me. End of rollover. That's always a good thing. Added 9,000 contracts in open interest. Most of that in the August month. So we've had a pretty decent move to the upside on decent volume and an increase in open interest. That's healthy for the upside auction. I don't think we're that worried about the upside auction. It almost looks like it's ready to accelerate above this upper kind of loose channel here. This is not where I put it. So there it is. So it does look like, there's a potential breakout above this loose trend line here. The weekly kickoff this morning here has been somewhat magnetic. It's basically trading right at that weekly kickoff 72.75 important inflection level where we would look for longer, stronger money traders to need to or want to adjust inventory. Hasn't necessarily happened here just yet. Sometimes these weekly kickoff numbers do become a little bit magnetic, and that's what it appears to be showing us here this morning. We're still in buy weakness mode, of course. The market is moving higher over time, but we're at the upper extent, the upper extreme of that. So I'm going to be very cautious today. Of course, 72.75 weekly kickoff is going to be somewhat pivotal. It's also really close to last week's high. And most of that, again, open interest was added in the August contract. So that's a healthy signal for continuation to the upside. Looking at the 30-minute chart now. Do we have some weak shorts here? I mean, this is weekly kickoff level, last week's high. We broke out above it. We settled above it. That's, a beginning of an acceptance of higher pricing. Settlement 73.12. Easy there, girl. She wants to come back up and say hello again. So that's a sign of acceptance. Do we have some overnight shorts here? We've just opened up. We left, I think, the opening range just below the weekly kickoff level. Now we're trading back above it. We're seeing some buyers coming in. But the whole thing is kind of, indicative of an acceptance of value in its current area. We're in value. We opened in value. We're remaining in value, at least for the time being. So that tells me try and stay patient. If you're thinking long above, short below the weekly kickoff level here as a pivotal area, I caution against that today because it is centrally located in value from yesterday. Lots of high volume nodes and low volume nodes on that move to the upside yesterday, leaving a lot of potential repair due for today. So I'm going to be looking for opportunities perhaps as the day goes on. I'm not in a big rush to get into anything. Now, sometimes you say that, and the market heads to one direction. Now we've lost our charts again. Let me put those back up as quickly as I can here. This is such a pain, and I thought I had it figured out, but there we go. And we are back. So, again, lots of potential repair through this profile from yesterday. Try and stay patient. Wait for extremes to look for your opportunities. Even the S&Ps. All right, rollover, over. We lost 489,000 in open interest yesterday, but that was the numbers of contracts that settled in cash. We added 17,000 yesterday on this move to the upside in the September contract. That to me is a good sign. We had buyers come back into this market and accumulate some new longs to the upside. New business is what we're looking for. We're still largely in kind of a big overall big balance here. We've got balance boxes all over the place. We haven't left that neighborhood yet. And it's going to be kind of all eyes on Powell this afternoon. All-time high is right up here. It's in the extended trading hour session. It's not going to hold for long with a great degree of probability. The market doesn't like to leave all-time highs in the extended trading hour session. Take a look at the 30-minute to see what we're taking a look at here. All right. So yesterday's upside move didn't really change all that much. We've got the all-time high right up here in in extended trading hours. It's the weekly kickoff high as well as last week's high. We've got some space to get up there. Settlement is 42.1375. We haven't really moved all that much. It doesn't look like we're going to be opening with a gap, or are we? It really just depends on what happens here in the next 15 minutes. If we open with a gap and can't close it, I'll look for continuation for this market to go to the upside. If we can't close with a gap, we open in range and value. This is pretty much kind of a high target area here, right? We've got point of control just below settlement. I'm going to call point of control 42.13. We've got settlement at 42.1375, and we've got value high and the high from yesterday right in the same neighborhood. So there's probably going to be fish here, but direction is, of course, unknown. Greg H., what is a balance box? Well, here's the daily again. So when the market is directional, this is kind of a weak chart because this is long before this was the front month. Well, we see the market kind of setting up areas of balance here, and then it balances here, and then it balances here. As these areas of balance get closer together and begin to overlap, it can be an indication that the auction process is tiring to the upside and needs a pullback to even out inventory, and then it can continue to the upside. Lacey. So here's a kind of a more clear balance box, a big move to the upside to another area of balance, and then all of the balance areas seem to be just kind of overlapping and no real direction to them. This is an indication that the auction process may be tiring. Here we can see a box, pullback. Another box, we get to the high, and we get a pullback. So the market is kind of showing us that it's having a hard time keeping the charts up here. That it's perhaps struggling to the upside and needs either a period of consolidation to even out inventory or a pullback in price. We've got the charts back up here now, so that's one of the things that I look at to say to kind of judge. Yes, the market is moving higher, but how good of a job is it really doing? possible distribution phase. Market Stalkers is saying, hello, Deanna. It's nice to see you. Some people would call it supply and demand zones. It's just a way that I visually look at how the market is doing in a particular direction. I think there's some good visuals on the crude oil here on the way up here. Okay, this would be an area of balance. Well, let me make this so that everybody can see it. Okay, so this area of balance, there's space. This area of balance, we were noticing a large increase in open interest during this period of time. I even noted it here. This was a 10% increase in open interest. We had a pretty good probability saying that there was going to be a substantial move in either direction once this was broken out of. Well, it broke out the upside, and we ended up with a pretty substantial move to the upside. These boxes are from a previous month, so they're a little bit off. And then it set up another area of balance, demand zone, supply zone, whatever you want to call it, another area of balance. Notice this one is a lot closer than this one. This would be indicating, okay, we're starting to slow down the upside auction a little bit, and we may need to have some kind of a pullback. Well, we got our pullback. We ranged right in this previous area of balance before starting to get the move to the upside again. So now we've got an area of balance here, a lot of space, another area of balance here. If we start to consolidate here, or if we put up another area of balance up here that's very close to the previous area, that might be indicating that the auction process is tiring, not over. It's tiring. We may need to consolidate here for a period of time or find a pullback to even out inventory before continuing the move to the upside. Hopefully that's a good explanation. Hey, I forgot to tell you guys, Wednesday, tomorrow, group coaching. Oops. Hey, I didn't mean to do that. Hang on. Group coaching. There's the link. Plenty of spaces. And we'll look forward to seeing you there. All right. NASDAQ. We've got a market that is actually presenting as really quite organized and strong to the upside. You realize it's taken a lot longer to kind of put in a new all-time high, but at least it has done that. The channel that we're in is very strong. There's very few gaps or unrechecked points of control on the way up. This is a very organized market. Open interest increased in September again, added 3,600. We lost 60,000 on expiration, but I'm encouraged by the fact that it was an up day. Not the greatest volume, but our equities don't really bring volume. That increase in open interest is saying that the upside auction is likely to continue to be healthy, at least for the time being. All-time high, certainly in play for us today. Not so much maybe in the S&Ps, but we're a lot closer to it in the NASDAQ than we are in the S&Ps. The 30-minute, I got Lacey moosing me for pets here. Did we have any overnight inventory? I mean, settlement is right here. It's 14,130. 14,130, we're trading there. There's no overnight inventory with which to work on an early opportunity. If we open with a gap, I'll work gap rules. If we can't close that gap, I'm going to be looking for a move right back up to our all-time high, which did occur in the extended trading hours. Oh, hey, we lost the charts again. Dang. Very, very dark. Very dark. I am so sorry about this. I don't know what it is about this platform. Sometimes it works wonderful. Sometimes it just doesn't. Sorry about that. We are back now. Thanks for letting me know. You try and keep an eye on it, but I get so involved in what we're talking about and what we're looking at. So, all right. So here's the NASDAQ. Back to the 30-minute chart. We've got settlement right here. We're at settlement. If we open with a gap and can't close the gap, I'll start looking for I'll just start looking for opportunities to look for longs. Gotta trade cheap though. Gotta trade close to points of invalidation. If we open with a gap, can't close the gap, it's not going to be that big of a gap. That might be just enough to help us limit our risk. That is really our job. Is we are looking for opportunities, and first thing when we see one is, what is the risk on it? What is the risk on it? All right. So patience. If we open with a gap, might change that patience just a little bit if we can't close the gap. Gold. Gold is just a suffering market right now. I'm a little surprised to see how deep this move to the downside got last week, but it's beginning to consolidate now. So is it possible we've gotten too short on the way down here? We're going to consolidate and even out that inventory, or even move back to the upside. You haven't seen a real face rip and rally which tells me that maybe we aren't too short here. Open interest continues to fall. We lost 6,100 yesterday. Is that short covering? People that caught this move to the downside covering some of those shorts? It very well might be. It just seems as though fewer and fewer people are interested in trading this market because we've had several days in a row of dropping open interest. Are we too short? Debatable. The longer we consolidate here, the less likely we're going to have an imbalance in multiple time frames. Take a look at the 30-minute chart. All right. Obvious. 1, 2, 3, fourth day in balance, in range, largely in value. The market, maybe got a little bit too short here before the regular trading hour open. Settlements all the way up here at 1782.90. Put that on your charts. We opened bordering value. We looked lower. We rejected. We're back inside value. I'd say there's a pretty good probability of us coming back to settlement, or perhaps even testing back to the high of value. But again, this is kind of, and I hate to say it, a little bit of off the radar for me right now, because this consolidation, I'm going to be focusing really in this consolidation on the extremes of it. Okay, last week's low. Our overnight high is relatively close to a potential area of supply from late last week. And in the middle here, I don't see a lot to do. So again, stay patient. Look for opportunities to limit your risk. Great risk limiter, last week's low. Great risk limiter, perhaps our overnight high, or this potential supply zone that we've got just above our overnight high. In the middle, it seems like a random walk to me, and I don't want to sit here and try and guess and take stabs at things. I want good risk management near levels that I can use to establish good points of invalidation. So, as much as I hate to say it, gold is it's on the back burner for me today. All right. There goes the charts. This is really throwing a curve into my groove here. And we are back. Jerry is awake. How do you pull the profile chart to include multiple days? I'll show you this as soon as we get to this on the... yes. Absolutely. Deanna, market stalkers are saying, so basically focus on swing extremes. If you haven't seen the interview with Deanna, check it out. It's on our YouTube channel. That's Market Stalkers Deanna right there. I feel honored that she's watching. Euro. What happens in gold goes with the euro. Lower open interest. Again, 6,800. Are we too short here? If we are too short here, we are going to be consolidating, maybe getting some of those too shortness out of the market. It's kind of consolidating down here. The extremes of this consolidation are what we were talking about. Focus on swing extremes. Here's the 30-minute chart. Okay, so we had some weak shorts here this morning. Obviously, they've taken price back to settlement. That's very typical of overnight inventory activity. If they don't continue to get paid, they go the other way and they bring price right back to where the move started. Okay? So with no gap, again, I'm going to be focusing on the extremes. Now, Jerry is Awake had a really good point here. Where are our extremes? Okay, well, take a look at the daily. We've got 1, 2, 3 days. There's a high and a low and a high and a low, and we're still inside those days. So if we're going to be looking at, where are those extremes? We're going to be looking at, let's say, here's Friday, here's yesterday. Okay, so Friday's activity was all the way, actually, yeah, this is about right. So I'm just going to take this and I'm going to grab it and I'm going to extend it all the way to the end. Okay, so if we're going to be looking at basically the 3-day balance that we're in right now, there are our extremes. So all you do is you grab the right side of the profile, click and drag, and then you can get your composite profile, which kind of toothy, but here's your upper extreme and here's your lower extreme. Point of control here, value low, value high. This actually looks like an all right level up there because we've got some confluence in point of control and value high. But that's how you expand it to create the composite profile. That profile to me doesn't look like it's done. Looks like there's more business to kind of clean up inside that range before we move outside of it. Alrighty, the 10-year. This is also on the back burner for me today. Recent probes up by price, rejected. Recent probes lower in price, rejected, and we're right back in the middle here. So it's going to be kind of a random walk, short time frame controlled opportunity for us, unless, of course, something changes in rates. Charts. What a pain in the butt. So obviously, last week's range, weekly kickoff, we're right in the middle of it. Be careful. It's going to be difficult to find opportunities to limit risk in longer time frames. As far as the daily, as far as the 30-minute chart, settlement is up here, 132.06. And where are we? Again, if I'm going to be looking at anything, I'm going to be focusing probably on the overnight high and low initially here. But this is kind of off the radar as well, just because of the positioning of price inside the longer time frame activity. If we're going to be looking to trade swing extremes, we're a long way from both. Be careful. All right. I've gone 2 minutes at least too long. We've got our equities already open, and I'm going to take my deep breath and get everybody down to work. We've got Coach's Playbook today. Dan should be back for the market recap. We've got tomorrow morning's market forecast. We've got group coaching tomorrow. We've got a lot of things going on. A lot of things going on in the market. I got to remember to stay humble, grateful, and creative in these trades. And I look forward to seeing you later on at the Coach's Playbook. Get out there, profit, trade well. Sorry I went too long, and I apologize for the charts. I don't know what it is. There's a gremlin about somewhere. Anyways, get out there and profit, trade well today, and we'll see you later on.